Equinix Inc., ticker symbol EQIX, is not your average real estate investment trust. It is the backbone of the internet. Instead of owning malls, apartments, or warehouses, Equinix owns data centers, massive facilities filled with servers, fiber cables, and cooling systems that keep the internet running 24 hours a day, 7 days a week. Founded in 1998 and headquartered in Redwood City, California, Equinix has grown into the largest global data center REIT. It operates more than 250 data centers across more than 30 countries, serving over 10,000 customers that include major cloud providers like Amazon Web Services, Google Cloud, Microsoft Azure, as well as financial institutions, telecom companies, and government agencies. At the core of Equinix's strategy is interconnection. This is what sets it apart. Most data centers just provide power and space, but Equinix goes beyond that by enabling its customers to directly connect with each other inside the same facility. Think of it like the airport hub model. If you fly into a major hub, you can easily transfer to any airline or destination. Equinix does the same for data. Its facilities are high-traffic hubs where customers collocate their infrastructure and establish private, low-latency connections to each other. This makes Equinix's data centers some of the most valuable pieces of digital infrastructure in the world. Equinix's revenue is primarily generated through two main streams: colocation services and interconnection. Colocation revenue comes from leasing physical space, power, and cooling for servers. Interconnection revenue comes from providing customers with high-speed connections between networks, clouds, and partners within the same facility or across the Equinix platform. This second category is extremely sticky. Once a customer builds connections inside an Equinix facility, the cost and complexity of leaving is extremely high, resulting in strong customer retention rates above 90%. As of 2025, Equinix's average customer has stayed with the company for more than 8 years. Financially, Equinix has demonstrated consistent and stable growth. Its revenues have grown every year for over a decade, and its funds from operations per share, a key REIT metric, continue to rise. In 2024, Equinix posted over $8 billion in revenue and nearly $1.1 billion in net income. It is structured as a REIT, which means it is required to pay out at least 90% of taxable income to shareholders in the form of dividends. Equinix currently pays a quarterly dividend of about $4.76 per share, or around $19 annually, with a dividend yield between 1.7 and 2% depending on the market price. While the yield may seem low compared to other REITs, Equinix compensates for that with growth. Over the past 10 years, EQIX has delivered total returns that have outpaced both the S&P 500 and most REIT indices. In fact, Equinix is often classified as a growth REIT rather than an income REIT, with its focus on expanding capacity, acquiring strategic assets, and entering new markets. Its capital expenditure program includes billions of dollars in ongoing development to meet the ever-growing demand for cloud services, artificial intelligence workloads, and edge computing. There are, however, several risks to consider. The biggest is competition. The data center space has become increasingly crowded, with major players like Digital Realty, CoreSite, and CyrusOne also fighting for market share. In addition, hyperscale cloud providers like Amazon and Microsoft are starting to build their own infrastructure, potentially reducing reliance on third-party data centers. Another risk is interest rate sensitivity. As a REIT, Equinix is impacted by the cost of borrowing, especially since data center expansion is highly capital-intensive. Rising interest rates can squeeze margins and reduce cash flow available for dividends or reinvestment. Furthermore, given its global footprint, Equinix is exposed to currency fluctuations, geopolitical tensions, and regulatory risks in multiple regions. On the bright side, Equinix is also positioning itself to capitalize on major trends like artificial intelligence and edge computing. AI workloads require low latency and high-speed interconnectivity, exactly what Equinix specializes in. The firm is already seeing increased demand from AI-related clients looking to collocate their infrastructure close to data sources. Additionally, Equinix is investing in sustainability and renewable energy. It has committed to becoming climate neutral by 2030 and already sources over 90% of its global energy from renewable sources. In terms of valuation, Equinix is considered a premium REIT, often trading at higher multiples compared to its peers. Its price to FFO ratio usually hovers above 25, reflecting the company's strong growth, high retention, and global dominance. While this premium valuation can be a hurdle for new investors, many believe it is justified given the mission-critical nature of Equinix's assets and its proven resilience through economic cycles. So, should you invest in Equinix? If you're looking for a REIT with strong growth potential, unmatched global scale, and exposure to long-term digital infrastructure trends, Equinix may be a compelling option. It's not a high-yield income play, but rather a capital appreciation machine wrapped in a REIT structure. The long-term investor should understand that this is a rare case where the REIT acts more like a tech growth company than a traditional dividend vehicle. Equinix's edge is its ability to scale globally, build carrier-neutral data centers that attract hyperscalers and enterprises alike, and generate recurring, resilient cash flows through interconnection services that are difficult to replicate. This is what gives it pricing power. Unlike commodity-based REITs that rely on tenant turnover and lease renewals, Equinix provides mission-critical digital infrastructure that customers are reluctant to move once established. Every fiber connection, every cross-connect, every cloud on-ramp makes the customer more embedded and more likely to stay long-term. That stickiness translates into durable revenue growth and reliable cash flow. Management has a proven track record of disciplined capital deployment, including strategic acquisitions such as the Verizon data center portfolio and key international expansions into Latin America, Asia Pacific, and Africa. Its IBX data centers and xScale platform help differentiate the company in both retail colocation and hyperscale segments. At the same time, Equinix continues to prioritize innovation with investments in edge nodes, software-defined interconnection, and automation. This ensures they remain ahead of the curve as the data economy evolves. With the explosion of artificial intelligence, machine learning, blockchain, cloud gaming, and the Internet of Things, the demand for fast, secure, and globally connected data centers will only intensify, and Equinix is positioned right at the intersection of all those trends. While short-term investors might be spooked by its valuation or rising interest rates, those focused on long-term transformation and secular growth are likely to view EQIX as a foundational asset. It is the digital infrastructure REIT of the future, offering stability and speed in a world that's becoming more connected by the second. If you have any videos you'd like me to cover, say it in the comments below, and I will break it down in plain English.